We're snorting cap rates and shooting up cash flow here at Deal Junkies. Welcome back to Deal Junkies. We're back in the studio with Sang Vu, and now we've swapped out Dane for Trevor Howard.
So this episode will be better.
I don't know. Dude, Sang killed it. We had an awesome episode.
Well, I was sitting out there. It sounded good.
Did you listen? Were you listening?
Yeah, I was listening to the end.
So much fun. I just want to keep going. We're having a lot of fun. So thanks again, Sang, for being with us today. Mike is still here. We're going to talk about your deals. We want to break in. We brought in Trev Bot because he'll have a million questions for you about how you put these deals together. But we want to talk about some of maybe one of your favorite deals, maybe some of the deals that were bad but taught you a lot of things. The deals that made Sang who Sang is today.
Can I tell you first what I knew about Sang beforehand?
We heard a little bit about you guys working in the same engineering firm back in the day.
Yeah, he essentially said he'd try to swat you off him like a flea.
Yeah, probably. No, because I was like 21, 22 years old, and then I was doing PE and PM work, and we would sign off on...
What's PE and PM work?
Project engineering and project management. And Sang had his company that was quality control or quality assurance.
Wait, he's a nuclear engineer. I thought you were some other type of engineer.
I had a mechanical engineering degree.
Okay.
And we were doing metal fab stuff. So he had this company that brought in all these people that would like review the paperwork, right? And I would be signing off on budgets and whatnot. So I would get to see what he charges for all the people. and then I would talk to the guys and see what they got paid. And I was like, oh man, that's a pretty awesome business. And Sang would come into the office every once in a while, and all his employees would be like, see that guy over there? He's a baller. And they'd be like, he owns a bunch of real estate and whatnot. And then I didn't, when I first met Sang, I wasn't buying any real estate at all. I didn't know you could buy real estate. And then through that year, I learned about it. And then they were telling me all about him and what he does.
Oh, wow.
Yeah, and I would talk to him every once in a while, but I was just...
So he's part of your origin story.
Kind of, but then...
Inspired you to get going.
So I got my real estate license. I'm like, that guy buys a bunch of real estate. So I emailed him. I was like, hey, here's a deal. And he emailed me like, this is a shit deal. And it was. But I was just curious what he thought about it. It was like some multifamily thing. I don't know where I had it. But I was like, all right, I'm selling it now. He buys real estate. Let me kick it over to him. And you got back to me and you're like, this is why it's not a deal. I was like, oh, yeah, that makes sense. But
that's probably some of the most helpful information for people.
Oh, yeah, I got to learn.
Yeah.
I got to see how an investor thought and why it wasn't a deal and how it makes sense.
Yep. But so if anyone's looking at a shitty deal, send a DM.
How did you figure out what a good deal was versus a bad deal? Was it just following this 1% principle that you follow, or did it take you time? You had to screw up some deals before you could realize and see the downside risk in some deals, or the fact they weren't going to give you what you wanted?
Nope, just basically the 1% rule. The reason why I keep bringing it up is that the rule that allow me to holding on this type of property for a long term without a lot of, probably sometimes, but not a lot of negative cash flow. Because my main principle in real estate is how long you can hold it for.
Mm-hmm.
If you can hold it for long enough, you will always make money.
Why?
Yeah,
why will you always win if you can hold it long enough?
So, two things. So, first of all, if you hold that long enough, cycle may go up and down, but during the 7 to 10 year cycle, value always gonna go up. Secondly, regardless of who in the White House, whatever they shit that they talk about, they're always gonna print money. Yeah, always. And then, so the value is always gonna go down. I mean,
it doesn't matter, Sang.
It doesn't matter. Yeah.
I love Sang.
And then thirdly is that because of that, long run, rent is gonna go up. So it's just like it will figure itself out. It will fix itself out in the long run.
So it's going to go up and down, but in the long run, it's going to go up, and it's because they're printing money, and you want to hold hard assets.
Exactly.
Mm-hmm. And like your mom taught you, it's easy to make more people, but it's not easy to make more land.
Exactly. Way easy to make more people.
And even when it comes to the land, which when you think about it, there is quite a bit of land we could build on, but it's way harder to make buildings.
Right.
And you think about, you were talking about like, oh, I got to go work for the city or through the city of Portland on permitting and this and that. It might take 6 months or 9 months or a year, and there's all these timelines you don't have control over, which is something you wanted to have in real estate is control.
Exactly. That's why I basically like a 1% rule investor and a basis investor. It's basically if I can buy these things cheaper than what it can build for, I don't have any competitions. That will lie. All I see is the upside. There's no if I don't have any competition.
Your basis is lower than replacement cost.
Exactly. So it's like, if somebody want to build next door to me, that's cool. But you're gonna build more expensive. You're gonna charge him higher rent than me. So,
and I think this distinction is helpful. Like the 1% rule in the Midwest, that doesn't force good basis. Right, you can just get an average acquisition, not have good basis, and get the 1% rule. But specifically using that metric in an equity market forces good basis.
Yeah, and it covers. It's like a cover. You think about like a covered land play.
Yep.
Now you just think about a covered plex play or covered commercial building play, to where I get to lock in, maybe longer term debt. And I've got this building, as long as I can hang on to it. That's our whole thing, is it's like we're long-term hold forever. That's kind of our favorite holding pattern, is hold forever. But it's, you get into these assets, and in the beginning, sometimes it's a rough ride. You got to hang on, you got to stabilize, you got to maximize, you got to do all this stuff. But the key is to make it through that, so you get to the other side. That building starts giving you money back, and you can go out and grab those other ones that it's like jumping on a wild horse, and you got to tame it, and then you got to jump off, and you got to go tame another horse.
It's a good analogy.
Have you been able to scale because you're trading assets and doing 1031s and value add plays, or are you using like the quality solutions company and generating cash flow to buy more assets?
You weren't here for the first episode. We already covered all this.
Oh, shit.
Yeah, slap that child.
None of those two. The only reason why I can scale is I be able to figure out a way to reuse my capital as quick as possible.
He scales because he's a junkie.
So let's talk about your deals. Let's get into deals. You want to talk about a bad deal that taught you a lot, or do you want to talk about a really good deal that you're excited about?
So I think that whatever we want to talk about today, I want to put it out there and make it clear, and that everybody can do these type of deals. I don't want to talk about big fancy number type of deal that scare people away, or think that maybe that's just one off deal type of thing, and then nobody take action after this. Listen to this podcast. I want everybody taking action, that everybody know that these type of deal everybody can do. It's just that whether or not you're willing to put the work together and do it.
Yeah. Did everybody just hear what Sang said? He said the word action. It's my favorite word. I love that. You got to take action. Stop the bullshit, you said in the last episode. What is the bullshit? Is that just in your head? You're scared, you don't think you know what you're doing yet? Like what is it that makes people not take action?
They try to put out a 10 years plan on a 1 year project.
Okay. All right.
I'm like, look, man, I mean, you in a 1 year project, you maybe you put out 1 month plan, and then next month you put out another plan. Just take actions. Do that.
Is that sustainable, Saying?
He's looking at what's right in front of him.
Yeah, next best step philosophy.
Yeah, even in your big goals are set out 4 or 5 years. You're not even in your bigger thinking. You're not even going out 10 years. You're bringing it into what do I got to do today? What do I got to do this month? And ultimately, I'm trying to get somewhere in 2, 3, 4 years. Once I get there, then we'll tackle the rest.
Well, what do they say? Like people overestimate what they can do in 1 year, but underestimate what they can do in 10 years. I just have enough time, you get there.
I like the saying that. When you sit down and you've got a really big plan or a really big problem, I like to say you got to eat the elephant one bite at a time. And so you've got this thing in front of you, and you're going like, how am I going to ever do that? And so for you're saying like, hey, I built a $69 million portfolio. You did it in just a few years. Everybody's going, how in the heck is Saying doing this, right? You had to take one step at a time.
And that's a good analogy, because if you're not taking any steps, you're just imagining something big, right? Like if you're taking action, you can't imagine something into what it's not, to intimidate you from not taking action. You take action, you get your eye off what it potentially could be, and you see it for what it is in front of you.
You got to make some forward progress.
Yeah. That's what I think this is the reason why I out of all the people I've ever coached and mentored, Sang is the most favorite. Sorry to everyone who isn't in that bucket.
That's because he should be coaching you.
That's what I was about to say too.
I already
what are you
said
talking about?
Yes, he expands my perspective, but he is a moving vehicle. Like, it's so easy to help a moving vehicle or to just say, look, you're veering into that lane. You know, it's just because he takes action.
Yeah.
And it's just, action's really easy to move in a better direction.
So give us a story. Tell us about a deal that's super relatable that anybody could do, that you like and that you've done multiple times.
Okay, so one of them is I would like to talk about a deal that get me started back into real estate again in 2020. So that's right up after the COVID happened. So in May 2020, I bought the deal that was sitting on the market for probably like 2 years. So it's not like it's any fancy type of deal, off market type of thing that people imagine that they gotta have to find in order to make money in real estate. It's just on market, sitting there for 2 years, listing at $1.2 million. I bought that in 2022. I mean in May of 2020, right after COVID, at $800,000.
$800,000. Okay.
Mm-hmm. So that deal consists of 3 single family, a vacant lot, and a 5-unit commercial building. So that, back to the story of, those type of deal is a mix between, a residential and a commercial. So a commercial guy looking at it and be like, what the hell I'm going to do with this guy here? So, but the resi guy going to be like, if I want to go and get the loan for the whole thing at a unit, I'm not going to have enough down payment for it.
Yeah.
So I'm trying to, so that's why I'm like, okay, why don't we separate out those 2 problems and fix one at a time? So why don't we fix the resi problem and then we'll fix the commercial problem? So that's exactly what I did. So what I did is I just came in and I separate them out. I buy the 3 single family houses at $250 a piece. So that, because I know that, with the interest rate at that time, at that point, with the rent that is coming in already from those property, I can quickly refinance and get my money out from those 3 single family with a DSCR loan, right? So because interest rate at that point is like 3 or 4%, whatever that is, right? So the way that I structure that is like I got those 3 property at $250 a piece, so it's $750. So I essentially just buy the commercial for like $50,000 cash, So that, because that's the killer of the deal, because it's vacant commercial property and no lender gonna land on that. If you combine all of them together, nobody gonna land on that. But if you separate them out, you'll be able to get the loan for the 3 single family, but
pay
you
cash for the commercial.
Yeah, pay cash for the commercial, and that's exactly what I did. So, and then 3 months after that, I'd be able to refi out the 3 single family, get all of my money back. Then I dump that money back into the commercial property to remodel it, get it up to speed, get tenant in. And then 2 months after that, I refinance a commercial property. Then basically get all of my money back, plus additional $200,000 from that. Basically, at the end of the day, is like, after 5 months on that deal, I have $700,000 equity, $200,000 extra cash, and $2,000 a month in cash flow.
That got you back in the game.
That got me back in the game.
So why did they sell it to you for $800,000 when they listed it for 1.2?
Because everybody wear masks at that time. So people scare, So
it's also not a great part of town.
Yeah. But yeah, you know what? It's like I said, everybody scares at that time. Nobody know what's gonna happen. The way that I simply see it is that, same thing. If the rent can supporting my loan, that I'm not gonna be in negative cash flow, I'm on for it. And that's what I did in 2020. That's what I did in, second half of 2022, and that's what I'm doing right now.
And those are again, like so this is a completely different finance world. So those we manage those. They're still not the 1% rule. I don't think. I think they ran for like $2,000.
They don't need to.
Yeah, because the
rate
interest rate's so low.
4% because I lock in the 30 years fixed.
So when interest rates are so low, you have to pay more for the property. They're not on discount. You don't get the equity. He can still manipulate the financing to make a play work. But if you had bought that, just say 2024.
That won't work.
No, but your price probably would have been a lot less.
A lot less.
Yeah.
Oh no! That sounds like a rip of a deal, just because you said it's 3 houses and a 5-plex
And a lot.
And a lot.
for $800,000.
And they're all separate properties, all abutting next to each other with commercial zoning. So it's a covered land play.
You going to build on the lot?
I don't know yet. Yeah, it's like Mike said. I have in my portfolio. I have a lot of things that I can do to maximize it, and that's one of the.
That's one of the things you
but I
can do.
haven't got time to run into it.
And he's also diversified across town. So he's got some assets where he can maximize them now because they're in a good part of town. But like that property is probably 2 or 3 cycles out from being developable. So now he's got 30-year debt that lines up with 2 to 3 cycles out to then develop it down the road.
Wait till the market catches up and it gentrifies or whatever, and next thing you know, you're sitting on something you could really
so
hit a home run with.
You've got maximization throughout the future of your portfolio by just phasing it through the right diversification plan.
Yeah.
Can you speak more to the negotiation? Because I always hear you're a master negotiator, and like you get the price you want basically every single time, even though it takes a while.
This is why you don't lift weights when we record podcasts.
Dude, we have 4 mics and 5 people, dude. Come on.
You'll have to listen to the last episode. You can learn all about this.
Well, on this deal specifically, did you start at 800 and then it took some time, or or they just took it right away?
Just like last podcast, Travis. So we start 800. I start 800.
Yeah.
We negotiate back and forward. We go up to like $850, $900,000. But then I pull out, hundred of reasons, go back to 800 because that's where I'm starting at. And that's where we get the deal.
He tells them the number he wants first, and they say no, and they counter, and he says, okay, fine, we'll do it your way.
Then inspects it and goes back down.
And then he just explains to the broker why it has to go back to his number. And then they say yes, and he does a deal. Sounds easy.
Because my understanding of how you're buying deals, too, is like a lot of the time on price, like you're negotiating price. Do you feel like you miss deals because you are negotiating it so hard, or you're just offering on so many it doesn't really matter?
I believe so. Yeah, there's a lot of. I think that there's some deal that I miss out because of the pricing. But it's just like I'm very a simple guy. I'm like, look, I mean, if it doesn't hit my metric, I can't buy it. I mean, regardless of I mean, how much you're gonna list it for? You can list it for. A lot of people piss off at me when my initial contacted them. I'm like, look, man, you got a broker, you can list, or you a seller, you can price whatever you want to price for. But I'm just telling you that this is the market value of it. You like it or not, it's up to you. So the way that I do it is, it's basically I come up with the price that I want to buy first. Initial discussion with them. Obviously, they're gonna bring up to the price that they want to sell it for. But there is a reason why I come up with that price in that very beginning. So I have to just keep communication with them right at the beginning, and basically convincing them that, hey, the whole goal is convincing them that, hey, I told you so. I mean, my price is at that price here. That's make it work for everybody. But you want to try that on, you can try that. But guess what, man? But here's the only reason why I come up with this price at the very beginning.
And you're breaking down the math for them, like this is how much money I'm trying to make.
Exactly.
Do they push back on that at all, or do they understand?
They push back a lot of time, yeah. But but if somebody that see you do all of the work already, let them know that you are one of the only buyer out there on the market already spending that much time and money investigating a property and understand the most understandable buyer on the market right now about that specific property. Give them comfortable and confident that, hey, it's probably the best I can get out there.
Yeah.
You're really selling your resume, background, and portfolio and performance track record that I am a buyer. I do close deals. I've closed deals like this recently, and here's the reason why your property is worth what it's worth. And I actually have a better idea of the value than even your broker does or you do, because I'm actively transacting in this marketplace.
And then that another reason is because those property are listed. So it's like, seller understand that everybody already seen that property. So if they don't have any action on that, and if I come and tell them this is how much it's worth, chances they're gonna listen to it a lot more than the off-market deal. Because off-market deal is like nobody's seeing it, so it's like, man, you can tell me, I think that you bullshit me and stuff like that. You know what I mean? But the on-the-market deal, sometimes, like, so I bought a deal like, seller listed for like $3 million. I offered them $2 million. Okay, and guess what? They accepted my offer for $2 million without trying to reduce it for $2.5 million and just see what happened on the market, right? It's just like there's some seller like that. It's just, you gotta. They just on the market for so long, and then the broker do a horrible job and stuff like that. So it's like they don't come to a realization of how much their value is worth unless somebody tell them.
It makes no sense. It just happened. He bought something for $500. It was listed at $800, and we're in the call. Why don't they just lower the price to $700
and sell it on
or
market
$650? And they just don't do the price reduction, and then 4 weeks later saying like, yeah, I just bought that for $500. And you look at it and it's showing active at $800. You're like, what just happened?
It's an interesting phenomenon that happens in real estate. One of the advices I give to investors is, you're looking for a motivated seller. Well, where are the motivated sellers? They're already on the market.
Exactly.
But then they look through the market and they go, there's no deals. It's like, what do you mean there's no deals? There's deals everywhere. Well, the prices are too high. Well, then make them an offer.
Yeah.
And in real estate, there's this misnomer that you shouldn't go and upset the seller and tell them a low price because now you're a low baller and you're doing all this. But if they've been sitting out on the market for a while, they're getting more and more and more motivated. Somebody who actually lists their property with a broker is truly a motivated seller. They're not testing the market.
Especially right now. I mean, the only reason why you sell right now is because you want to sell it. You need to sell
You're
it.
a seller. You need the money. You need you're doing a trade. You got an up leg or whatever the case may be. So why not go in? And why do people, when they see a deal and they say it's 1-2 and it should be 800, why do they not offer? In the real estate world, for some reason, they'll offer like, well, if it's 1-2, it's got to be worth at least 1-1, or I'm not making the offer. I'm not gonna insult the seller. And you're just going, it's just not worth that. It doesn't matter. Like, so when you're looking at deals on market and you're looking at stuff that's been sitting there a while, how do you find the deals? Do you just take every single deal that's been there for a while and say, this is what I would buy that deal? What makes you like the deal? Because most people are price sensitive. They're looking for the deal they think is the best price before they offer on it. How do you go look at a deal to where you go, I don't care, I want that deal, but this is my price and I'm going to make him an offer?
Yeah, so it's like, so there's two things, right? So first of all, like I said, I'm a basis investor. So it's like there's two things. First of all, the cash flow of it, like 1% rule, for example, and then secondly is the price per square feet. So let's just say 150 or 100 to 150 per square feet. So I know that building it is a lot more expensive than I can buy it for. So those are the one that I'm staying engaging and asking the broker. Now, once I start to engage the broker is when I come up with that 1% rule. It's just like, hey, will your seller consider, it's just as simple as 30-second email. Hey, I saw this property on the market. Will your seller consider $1.5 million? That's it. I mean, they probably, 90% chance is I probably don't hear from them.
Yeah, I was going to say, how often do you not hear from them?
That's okay. Because I already saved that property on my list. 2 weeks later, I check back again. Hey, is property still on the market? Do
you send them a new email or just resend the one you already sent?
Just resend what I sent. I'm like, hey, will your seller consider that? And I just keep doing that at some point, until they tell me to go pound sand, and I will do that. But
do you ever just write the offer so that it gets in front of the seller? You always ask for the broker's permission before you write.
Yep.
Because you don't want to piss the broker off, make him look stupid, or her, and then they got to take that low ball offer to seller and then go, well, either I mispriced it or this guy's an idiot and he's just lowballing us. I mean, I've had lowball offers that were lower than what the value of a property was, and I just take it to the seller and go like, well, it's an offer, but it's not really an offer.
Yeah, people underestimate how important the listing broker's responsibility is in the transactions. They are very important, especially if we play in the asset type that we're playing. If we're talking about 50 unit or more, then we're talking about a different seller at that point. But if you're talking about 5 to 50 unit, we're talking about mom and pop seller most of the time. They don't know what they don't know. So most of the time they will take a lot of advice from the listing broker. So if we somehow be able to not pissing that guy off and work with them, show them that a $4 million compared to a $5 million, your commission reduction is only I don't know how much that is. So you rather just try to put a deal together. So they will find and figure that out, whatever way that they can do to help you out to get that done. So that's why I don't want to piss them off with an offer that they have to just try to the seller, try to present it and stuff like that, rather than just ask them to see where they are somewhat at.
You're finding ways to really make friends with brokers and build relationships with the brokers so that they don't feel like you're making them look bad or you're coming in as a buyer who's not going to close. You're always going to be the guy that's going to get a deal done, but it's got to be at your price.
Are you buying a lot of these deals with terms and seller carried contracts too?
Not many.
Brain damage for him. Slows him down.
Okay.
Not many, but so interesting enough though. So yesterday, for example, so I got 3 deals in the contract right now, 74 units spread over 3 deals, about $9 million. And then I have another $15 million, 65 houses that I'm about to put it under contract soon. But here's the thing though. So all of those deals yesterday, I just came back to them. I hit them at the right time. I guess whatever, because how sensitive the market nowadays with everybody. So what happened yesterday? Right, like
Liberation Day.
Exactly. Everybody's scared and stuff like that. That's when I start to hit them. That's where I would know the one that I'm under contract and the one that I'm about to get under contract. That's where I should hit when I hitting the seller at that time. It's like that's where they scare the most, is when I can get the best term out of that. That's yesterday literally I changing those to a seller carry contract type of term creative to make sure that the whole reason would be, hey, economy go to shit, we don't know what happened in the next 2 years, I need to reserve my capital. If you want to see me to success so that I can pay you, I gotta reserve this capital instead of putting it down to the bank. So you gotta work with me on that here. Carry it a second, or do whatever you need to do for me to reserve that capital to improve the property. So make sure everybody win-win in the back end. So that's when I start to hit them. So that's what I did yesterday. Just retrade instead of pricing, but terms.
Yeah. No, I like that.
Yeah, bank terms are counterintuitive because they want you to put as much down payment as you can so that you have low leverage, but then they want you to have as much liquidity as possible so that if things go sideways, you don't lose the property.
It's just like the Fed and their double mandate fighting each other.
Did
you guys get any phone calls from sellers yesterday?
Sellers?
Yeah, we did. Commercial seller. Panicked.
About the tariffs?
Yeah.
Really? Mm-hmm. Trevor doesn't watch the news. Should we tell him what's happening? We had Liberation Day. Do you know what that is?
No.
So Trump put reciprocal tariffs across the world on almost every single country, and the stock market has dropped 3,000. Dow dropped 3,000 plus points in the last 2 days.
That's like 10%, right? Because it's normally
the 10-year right now is like 3.9.
Okay.
It was crazy because when he announced them, the market didn't drop. It was post-trading that first night, 950 down within an hour of post-trading, and then the next day it just kept going.
Because it was roiling through other markets after our day closed.
Exactly.
Yeah.
Yeah. And then the bond yields, you look at the
Well, he
yields.
also didn't announce it till later in the day, right? It was
correct. Yeah.
4 p.m. or 4 p.m. Eastern.
Mm-hmm. And we hadn't had the 10-year close below 418. It was flirting with it. It would go under it during the day, but close up at 4.2. And then that first night, it closed at 4. went down to like 4.1 in the internight trading, and now we're closing under 4.
Under 4. That 5 years at 3.65.
So why is the 10-year dropping with all this happening? Because people thought
safe flight to
people
safety.
thought it would go up.
People are
correct?
selling stocks and buying bonds.
This is allocation. They're moving out of stocks and they're going into safety.
Yeah, it's an allocation event. The question is, how long does the allocation event stay allocated this way?
Yeah, that was one of my concerns yesterday. That's why I come back to them. I think that we are passing the problem with the high interest rate now. Now the second problem, which is a bigger problem that we're going to facing in the next couple of years in real estate, is the liquidity of it. So basically, I'm trying to reserve as much liquidity as possible, especially with the deal that I'm doing or about to buy right now. The reason why I'm saying that is when rates go higher for the last couple of years, everybody is, as a real estate investor like us, wishing it to go down. But once it's go down, be careful what you wish for. More things happen. The reason why it's go down because equity go to
bad things are happening. Yeah.
So nobody have job. So if unemployment go up, nobody have job, nobody paying your rent. So that's going to be a bigger problem. And especially if bank doesn't lend you any money, you can't even buy anything. So that's more problem, because if interest rate high, it's just a number on your calculation that you plug in and make the deal work at that interest rate high, but you still can get lending from the bank. But if lending stop, that's going to be a bigger problem.
And lending did stop a couple years ago, really. I mean, we had a credit crunch. And your Plexes, you've been able to do hard money and DSCR. The private lenders have really stepped in. We consider hard money is more like, 3 points, 10 to 12%. They go out, they've got a list of investors they raise money from. Private money we consider to be more like they're tapping a REIT. They're going to Wall Street, they're pulling money. It's still not bank money, but that private money and the hard money has really over the last 3 years just exploded because banks aren't lending and most credit unions aren't lending either. So it's very, very difficult to find funding for your deals.
Yeah, it's especially let's say those 48 property 1 to 4 unit, right? If that DSCR product doesn't come out, which they just come out last couple of years, but if it doesn't come out, there's no way for me to buy those properties.
Yeah.
So it's come out because the investor tries to. Because those are the investor funding.
Yes.
Exactly.
It's more of a kind of a hybrid hard money, private money type of a situation. Yeah. You're not going to a bank. That's the problem with banks is they've got to deal with regulations and they've got to follow a certain set of rules that maybe even the credit unions don't have to use. So I don't know. We've found it to be very difficult in every deal that we're doing to find funding and insurance on both. It's just been the last few years we've been able to buy some deals, but it's been harder. It's just been harder to transact. In 1 to 4, maybe not so much.
Yeah, there's a big distinction between the 1 to 4 and the commercial. And what everything's saying said makes real complete sense in the commercial world because those are income-driven properties, and those income-driven properties are typically more in line with the overall economy.
Yeah, businesses closed down, more unemployment. You got tenants that can't pay, both commercial and residential tenants that can't pay.
So the actual income is hurt. So even if interest rates go down, the income's hurt, so it doesn't change your liquidity, your lending portion. But on the residential side, we can have a lot of job loss, and we can have the unemployment rate increase, and we can still not hurt the effective purchasing power, but actually increase the effective purchasing power and increase overall aggregate demand in the 1 to 4 world because of the chaos that's happening in the commercial world. And then when you throw on top of it that we've been for 3 years in the pretend and extend world, that's where his liquidity. So he doesn't need the liquidity in the context of the deal that he just mentioned, but you need the liquidity for all the opportunities that are going to be coming up. So again, opportunity costs are getting more valuable or more costly to your current deals.
So the advice is right now, sit on more cash. You're a conservative guy, though.
So sitting on more cash, not to basically fix the potential problem that come up, and then secondly, getting you more deals. The reason why I'm saying that because when you get into a deal with a seller, your first pitch is gonna be, look, man, you don't want to be going to the seller and say, hey, I'm fucking broke, don't have money here, do a seller carry for me on second. You're gonna go into the deal and telling them that, hey, I got a ton of cash here, I can buy that with your deal, but here's how it benefits you if you do a seller carry. It's not like that's the only option that you have. You have 2 options, but I give you the better option here, which is seller carrier. But you gotta have the cash to show them first before you can tell them that.
You gotta be a good borrower.
Yeah, you gotta have to have liquidity to show them that hey, you truly have two options, but I'm giving you a better option here. So instead of just come in and say, hey, I just do sell or carry or I'm not gonna be able to buy it. It's like then nobody gonna sell to you because you're not credible enough to do that.
Yeah.
So you're buying like $500,000 deals, and you're buying $9 million deals. Is there not a deal that's too small for you to do at this point, just because it takes too much time to do all of it?
It's no deal is smaller for me. Whatever deal that I can get my money back as quick as possible.
The buy box is 1% rule. Get your equity or get your capital back out within 6 months or 2 years.
How do you have enough time to do all this? Because you're running. Do you still go into the office for the engineering stuff too, or not anymore? Because you used to be in there like pretty frequently.
Not anymore. The other thing that I do is I'm trying to leveraging people a lot. So basically, what I did with the engineering, same thing. So there's a whole pie there. I cannot eat the whole pipe. So why don't we just, reducing my involvement in manpower there for like 90% by just partner with somebody who can run that for me. Make sure that I still have control though, but just partner that with somebody, have that person run it for me so I can get away from that and do what I like to do. So that's what I've been doing. That's what I have done with an engineering firm. So I have minimal hour on there right now. Mm-hmm.
Got a great operator partner. And then he house hacked it. He went and bought a building for his business to live in. And then he bought another building to move his business into.
SBA loans?
No, not SBA. It's just a regular credit union loan.
Okay.
So it's just the engineering firm is, first of all, it's an option for me there to buy those commercial buildings. Why I'm saying that is, and then also to fix my fucked up on those commercial buildings. For example, right? So I have that building that now is like, I have a retail offices building that now is under the SCI requirement from the bank.
Okay.
And they start to, because some tenant moving out and stuff like that. So they start to get on my ass and like, hey, you gotta deposit.
You increase the rent of your engineering company and just.
So what I did is I'm just putting leases between the building to my engineering
and then
consulting
you do
firm, and then the SCI go up, and then get there off of there my ass for like a while until I get a new tenant in, or just.
Yeah.
So you sign a higher lease to cover to do the debt cover.
To do the debt cover and stuff like that. Mm-hmm.
That's cool.
Underwriters are smart.
They don't care. I own my own office building. That's what they wanted me to do. What are the leases? Oh, here I raised them. It's all good.
That's so fucked up.
I mean, you're paying it. It doesn't matter.
It does matter because it's a smoke and mirrors way to make them feel good.
They're two different companies. My holding company and my business are two different companies.
Yeah, Mike, calm down over there. Come on.
And they all do that just because so that they can check the
down.
box for the regulator. They're not really care. They know that Crab is credible enough to pay the rent. So why would they care?
Well, if you marked it up 10 times over market value and tried to go do a cash out refi, they'd go.
That's a problem.
So as long as
that's
it's
not going to work.
Some reasonability to it.
Yeah, exactly.
Reasonability, ability.
That's a new word you just came up with.
So we were going to talk about a bad deal too, right?
Yeah, let's talk about it. Let's talk about. I know that you went through some hard times. Can you tell us a little bit? Sounds like flipping. What kind of created a lot of loss or heartache, and maybe some lessons for you? You want to talk about that?
Yeah, sure. So that's what most of the kid and regular people like just try to get into real estate doing, right? First of all, hey, how do I make a quick $50,000 here, $100,000 there, and just try to, hey, it's real estate is so cool. Let me make $50,000 by, and the only way that you can do that is flipping. You cannot buy and hold and getting $100 per month is gonna make it work for you.
Yeah.
So same way, try to do that. 7 properties, buy all of them at the same time.
From the same seller, or you just went out and bought 7?
Bought 7.
Why'd you buy 7 instead of 1 to try it out?
I bought 1 or 2, and then I just along the way I'm like I'm a badass guy here. I probably can do more than that. So keep buying.
What year was this in?
20. When you asked me about real estate in 2019, I'm like, Trevor, you probably don't want to know what I'm doing right now.
He was doing it at the same time I was.
Okay.
He actually came in the office. He's like, I'm going to buy 7 properties in the same month and flip them all. That was his goal.
Yep.
Were you coaching him by then?
Mike's like,
why do you think he got in trouble?
No, my coach me to buy that at the right deal though. It's the right deal, right buy, but it's just the execution of it is.
You didn't have the bandwidth to really manage that process of 7.
Plus with the bad partnership and stuff like that, another thing that I want to raise concern about partnership is it's very easy to come in on the table with a partner and say, hey, you 50, I'm 50, let's go into a deal and stuff like that. Without, lay down a specific goal, duty, and responsibility for each of these partners. Because if you don't do that, the chance that you're going to drop or step in each other's toes.
And how do you measure their responsibility and duties?
Yeah,
as
we talk about that a lot, even here on Deal Junkies. Is like when partners are the best and worst part of real estate, but when you form a partnership, you should really sit down and be mindful to talk about what roles you're going to play, what responsibilities you have, what happens when things go wrong, and the reason why you're partnering, other than just like, hey, there's 2 of us, so let's just go do it.
Yep, it's very uncomfortable at that first meeting. But guess what? It's going to solve a lot of problem in the back end.
Yep.
So if you just come and, hey, man, we're friends, so let's just do 50-50 here, go into this deal and figure that out. I guarantee you're not going to be friends in 2 years.
So was this partner with you on all 7 that you took? And was he out finding the deals, or what was his role?
That's why his partner is a problem, because there's nobody define what role they're doing,
Okay.
So they step in each other's toes on like, how do you managing this contractor? It's my contractor. Let me do that myself and stuff like that. And then you go and then you check in that 2 weeks later, nothing get done, and you ask them, and they're like, "That's my contractor. I got plan for it. Don't worry about it," and stuff like that. So it's like, it's just there's no balance there.
Had you ever partnered with that person before?
No.
Okay. So the first thing was you didn't define roles. And then you were stepping on each other's toes because it was like, who's running what, whose contractor's not working, whose contractor is working. What else went wrong?
Thirdly is, what I would say is you truly know who the person is when they have the money. Before they rich or they have the money, you probably don't know who true they are until they actually have the money.
Character.
That's how I would phrase that. It's just like, things start happening when you start having a lot of money in the pocket.
Yeah, it magnifies who you actually are. Magnifies who you are.
I'm not sure about magnified, Mike. I think that it just show you who you are.
Yeah, that's what I mean.
It exposes your true character once you have money.
Yeah, exposure is a better word.
So you probably don't see that side of it when you first.
What about exposing them when they run out of money?
Yeah,
that too.
That's a different person also.
That too. Yeah.
So did you go do like 90% hard money loans and buy all 7 of these?
Yep, 90% hard money loans. Thinking 6 months done, put it on market for sale, take 2.5 years and stuff like that.
And out of the 7, not all of them were losers, right? It was just some of them lost and some of them won. And
How much did you lose?
$4,000.
$400,000. What was the worst part of that whole process?
The worst part is losing a friend, I guess.
That was your friend that you partnered with. Why was it? Because the deals went south that you lost the friend, or what? Is there other things that happened?
Yeah, it's more so the third point that I just made is just basically expose who you are or who your friend is whenever they have a lot of money in their pocket. They think differently, they act differently, they do different things.
Might cloud your judgment a little bit.
Did you guys split that loss, or did you end up having to cover the whole loss on it?
Oh, that loss? I covered the whole loss for it, yeah.
So he wasn't really your partner.
Yeah.
And that's the problem with the 50-50 partnership, was Sang got in a position where he's trying to sell real estate and dissolve a partnership, and the other partner didn't care. He had all the leverage. So Sang had to buy him out of a dissolution so he could sell for a loss.
When you say you didn't care, what do you mean?
The partner didn't care. He's like, great, we're taking on losses. I don't care, but you also can't sell these without my signature, so you have to pay me so you can sell these properties. Right? He just
why didn't he care though? He was just fine losing money.
Yeah.
Yeah, that's how unreasonable that is.
Oh,
Right.
Well, he wasn't losing his money.
Correct.
And he knew he wasn't going to pay for part of the loss. He was just telling you it's all you.
So going in on the 10% down, that was your money. So
Oh no, that's so he's partnered with me on that first engineering consulting firm too. So that with our money.
oh, and that was the one that ended up shutting down.
That's shutting down. Mhm.
But Sang had a future that he was trying to build for and needed to get past these losses for the future, where his partner's mindset was, it's all lost. What do I care? I'm going to take as much, like, it's the exposure, right? He's like, you were my friend and we lost everything, but you know what? Money means more than the friendship. And so if you actually want to realize your losses so you can move forward in the future, you also have to pay me. And that's how friendships are lost.
So why would you have to pay a guy who put nothing in where you're in deals that are upside down?
you can't literally sign the property.
So the guy is holding you hostage.
Yes.
Essentially, he wants a ransom check.
Yeah.
Yep.
How much does that check cost you?
250.
Yeah.
You
and,
pay-
and then 400 on top of that, or all combined?
No, all combined.
Okay.
Yeah.
okay.
So he
So
only
you had to pay him
lost-
$250 to get out,
To
and then
lose
you only
another
to lose
$150.
$150 to get rid
Yeah.
to save your reputation, your credit, so that you can move on and build a real
Exactly.
estate empire
And the title companies wouldn't allow him to sell those unless
without
he-
signature.
without the dissolution.
Oh, wow.
That's the problem of partnerships that people don't actually look into.
So, and you put 7 deals under contract in 1 month, or around?
That was a
That-
joke.
that-
Was it
Oh.
really 1 month?
No, it's not.
Okay.
It's spread
My
over
statement
3
was a
months,
joke.
mhm.
Yeah.
2 months.
Were you just buying them from wholesalers
No, on market.
on market?
Yeah.
Okay.
When did you want to actually buy income producing property and hold it?
When?
Yeah.
2020.
Okay. After all the losses, you're
After all
like,
the
forget
losses.
this.
Yeah. mhm.
You guys did the same thing.
Oh yeah, Sang and I are like long lost brothers. So do you flip?
Which look different. But
Yeah. No, we're not too far
You're
off.
not that far off. You go bald and you guys are.
Yeah, we just got to shave your head. We'll be about the same. Do you still flip?
No.
He flips into a portfolio.
So you went from flipping. So in your mindset in the beginning, it was like, I want to make a bunch of cash. Like you were saying, 50,000 quick, 100,000 quick. You went from sort of a get rich quick plan that failed to a get rich slow plan. Let's build a portfolio over time that eventually will build equity and start to throw cash flow. Was the pain of flipping part of what led you down the path to become a long-term hold investor?
So it's not too much about the pain of losing money. It's more so about the risk that I see for short-term rich debt type of thing. So it's like, for those 7 property, for example, if I have a long-term debt on those, I probably still keep those right now. So it's just like there isn't an option for you to do that. So that was more my concern. Is like,
So you realized that the type of debt you were lining up didn't really match your personality and the amount of risk you wanted to take on as an investor. So you as an investor are more conservative, you've talked about, and so you want to line up debt that matches your appetite for risk along with the asset that you're buying.
exactly.
And long runway is the way you do that, so that you don't have to figure out how to time a cycle in 6 months. You can say, hey, over 10 years, this is going to work.
Exactly, so that I don't have to listen to Mike like every week about the
Okay.
No. You're gonna have to fucking listen to me right now. There is a slight distinction. He just no longer flips houses. He flips debt. He chose to stop flipping the property
Take
and
notes,
focus on flipping the debt.
moving notes to other to other properties, or actually like
just,
wrapping notes.
Just getting bad debt and then refinancing out of it. So he's using debt to get a asset, and then he flips that debt into better debt.
I mean, you're burring.
It's
is
the
all you're
burn,
saying.
yeah, right. So he's just saying he doesn't sell the asset.
So
I think the student has become the master, Mike.
No, I'm just more complicated.
He speaks English better than you do.
Yeah, his words make sense. So have you had like a long-term hold deal that you felt like wasn't the best that you've done too?
yeah, a few of them for sure.
Can you go through one of those? I think those are interesting too.
Yeah, so I wasn't come to prepare for that. I mean, like, so the way that I see those is like you're probably losing maybe a couple of $100 or to $1,000 a month every month, and then you see that and you be like, what the hell are you doing here? You just sign up for that, and then you just keep paying for it, and then you put all of the work on it already. But all I'm telling myself is, guess what? I mean, in 5 years, probably figured it out by itself. Or when the rate go down, you refi, and then everything is going to be
Yeah. So on those, your margin was just slightly off from where you thought it would be, slightly negative cash flow, and you're just holding and wait.
Yeah, exactly. So it's a lot of it. It's just basically like, you buy it, relate to the current rent that you're getting from the tenant, and you find out that, the tenant is like their brother and sister of the seller. And then it's just like the true rent is not going to be like that and stuff like that. So it's like, but it was fine whenever you buy it, because the rent, the lender is just based on the current rent right now to lend it on you. But once you lock it in for 30-year fixed DSCR loan, and then after that shit happen, rent go down, that's when you in a shit show for the cash flow. But
yeah. Can you break down your plan on the other deals you were talking about that you're going to do right now? Sound really interesting. You said it was a 74 unit for $8 million or something?
3 properties.
So I got those are the one that under contract. Those are the boring one though. It's just like, it's just I buy it on a basis scale. So for example, for one of them is 19 unit new build about to complete in Portland, in a decent area. I'm buying it like $140,000 a door.
Wow.
So
what are the unit sizes on that?
It's just 5 of them is studio, and then 14 of them is one bed.
There's still $200,000 to build them.
Exactly. That's
So
what I meant. So
is
that's
the
why I
builder
just buy
just
it.
stuck hard money? They can't get out of it. They didn't plan it right.
Those are the one that the son was inherited those property from the dad.
Oh, step up. Just wants cash.
Yeah, just want cash, and they already sold me 2 or 3 properties, so it's like they
Easy.
didn't want to list it on the market. They just want to just come to me and then just sell it to me.
Yeah.
So those kind of things. So I'm buying those just because of the basis of it. I don't love to do those because I'm a value add guy, but
Yeah, but those are the best because you get to add the value without doing anything.
Exactly.
So are you gonna buy that, or what's your play to get your money out of that? Because you like to go money in, money out, or are you just holding it at that
Just
point?
holding out for 2 years and then refi and get
Okay.
money out whenever I stabilize it. So those are the one that the long term money sitting on their type of structure that I set up at the beginning.
Okay.
But like I said, those are the boring one. The one that interesting one is the one that align with what similar to what you guys doing is having a seller be a partnership on your end. For that is that's 68 houses there. So it's the same repeat seller. They sold me 2 property already. They have another 7 property that spread out, that have 68 single family, detached single families over 7 properties in Portland, Southeast Portland area, that they want to sell the whole thing to me.
Yeah.
So, I mean, that's going to be like a $15 million purchase on that. So if you just go out to the bank and get a traditional loan for that, you probably need about $4 million.
You say $4 million for the $50 million purchase?
15.
Oh, 15. Okay. Okay. Yeah.
So that's the one that I gotta be creative and figure that out a way to work with the seller to get them ride that along with me and stuff like that.
Are you gonna leave them in as an equity partner or as a debt partner? You think?
As a debt partner. So basically, what I do, the way that I structure is that is so they sell it for me for 15. They still have $5 million debt. They don't want to be in on second. So I gotta figure the way to solve that problem with them. So what I'm doing and proposing is, I think that we can put the deal together. Is that I'm buying the first 3. For example, I split it out for 2 transactions. I buy the first 3 on one transaction. That way I can get a loan from the bank, $5 million loan to pay them off, and then they can seller carry me the remaining property
in first.
For the other property, and in fact, they're going to carry me more than what the remaining is, because I want to make sure that they carry me with the down payment that I already put in for the.
Yeah, so they'll have extra money from you buying those other 3. They'll carry 100% plus a little additional on those free and clear ones.
Yep, plus the down payment that I already put in on the first 3.
Yeah.
So basically, I'm trying to buy that with no money down.
Yeah.
And my philosophy for them is just basically, look, man, it's not like about the risk here. It's not about like I'm trying to buy that with no money. It's not about that I have no money to buy this. I can buy the whole thing from you, and here's the proof of it. Like that's why the liquidity comes into place again. But I'm like, but you probably don't want me to do that because you want everybody's success here. So let me let me reserve that capital, because since you don't need the money right now, why don't you just let me reserve that capital to fix up the property, and I will pay you back in 5 years.
Yeah.
And this is a great example of how you deal with world events, is because you've been working on this deal prior to the tariff day, and you've been structuring most of this. What I heard, all that changed was the seller leveraged increased. You just reduced your cash at closing. That's the only, and it's a small tweak to a structure you already put together. And so all you're saying is, because we didn't ink a paper already, and because world events are different, and because we just have something that's unknown, not because it's the deal's drastically threatened, but just because there's unknown, here's how we just deal with that in a reasonable way that isn't asking for too much from the seller. It's putting him in a safer position. It's putting you in a better position. And so you're just looking together at, hey, we've got an issue. Let's overcome it together.
Yeah, win-win. I love it.
How many houses do you say you were buying?
68.
68 at 15 mil, so $220,000 a house.
And then I can so if I'm mindset, and then want to condo conversion it and sell them at like $4,000 per houses, but if I'm a gap mindset, I'm just gonna hold it, like go in there, get on with the bad tenant now, do a value add, get new tenant in. Those houses can easily rent up for $25, for example, a month on that.
$2,500 a month. Yeah,
that's more than 1% rule that I.
Yeah, that seems like a really good deal.
So are you Mike or you Gabe?
I don't know yet.
Well, the cool part is you can always condo convert them later. It doesn't matter, right? So
Exactly.
you can sit on it for however long you want.
Exactly. So that's why I like about it. It's give me an options to choose what cycle that I want to sell it for.
Yeah. So why is he comfortable selling? Because when I hear $220,000 a house, I'm just like, that seems insane. Like are they like
they're
worth
not houses.
400?
They're not houses.
They're townhomes or
they're multifamily properties.
Okay.
They're just built as houses, and so they have financing of the commercial multifamily world. They don't have the financing of the world.
Okay. So you would go divide condo it all, do the HOA, and sell them individually, and now it's a $400,000 home. Okay.
because they're no longer multifamily and they're now single family.
And why would a seller not go do that on the first place? He just doesn't have the wherewithal, or it's too much time and energy. It doesn't really matter to him.
Just like a seller that on the market, a lot of mom and pop seller on the market right now, they don't have time, expertise, and energy to do all of that. All they want is a check in the mail every single month. And if you can provide it to them, they will do whatever
They want to retire.
Yeah, he's at the end of his investment.
We all want to work, and there are people out there that don't want to work anymore. They
Exactly.
want to reap the benefits of what they already built.
Exactly.
They probably bought those things for $20,000 a door.
Exactly. So the offer that I bring it to them is just basically, look, man, I know you're tired of this property. Let me do that work for you, and you get the same check, if not better check, in the mail.
Yeah.
So it's win-win for everybody.
Yeah, because he's not going to go raise the rents. He's not going to keep updating
Exactly.
it. Yeah.
It's really good advice to be people's retirement plan. People don't think in terms of that everybody's at a different age, a different cycle in their investment life. And there are people that are ready to exit. They know there's more money to be made, but they've made plenty enough, and they don't want to. They had fun while they had fun, and now they're ready to go do something else. And they're going to let us. They know that we're going to come along and make money, but they're trading the future growth for them feeling comfortable with us being their retirement plan. That this is going to be somebody I can trust to send me that check every month, so I can go play and enjoy the rest of my life, and they can go be the deal junkie, and I can go do what I want to do now.
Exactly.
And that's one reason why it's so much better to work with a non-distressed seller that has made a lot of money, because they don't care if you make money.
They want you to.
But the stressed out person that's never made any money is like, fuck you, you're not going to make any money on my house.
Yeah.
Scarcity versus abundance.
Exactly.
So how have you seen your portfolio scale recently? Because you're about to increase your portfolio size with these deals you're talking about by like 25% just very soon. Like that's a pretty big jump, right?
Again, last podcast, but that's okay.
Trying to get to 100.
Okay, I'll go listen to it.
He's trying to go from 69 to 100 by next summer.
Oh, hell yeah. Okay.
$100 million by next summer, and then 250 by the time I'm 40. So about 1,000 unit is what my goal is.
How old are you now?
35.
Okay.
I love it. Saying it's been great having you on the show again and talking about deals. We kind of got to recap a couple of things because Trevor wasn't here for the first
Dane
one.
wouldn't let me come in.
We kicked Dane out so Trevor could ask some questions. Again, thanks again. We'd love to have you back on the show. We love what you're doing. We share a lot of the same philosophies, and it's been cool to meet you. I promise we won't steal saying from you, Mike, although I'm very tempted. I really...
Can we be your friend instead of Mike?
If I felt you were a threat, I wouldn't have invited him here.
I would never do that to you. I would never.
Would he rather be with you, or you actually, or me, who I just don't care? And
I'm abundance guy. We're all going to come together and do a deal together. I know we will.
Oh yeah.
Saying thanks again for being on the show. We really enjoyed it. If somebody ever wanted to reach out to you, would you give out your information for somebody who wants to email you and ask a question or bring you a deal?
Or needs engineering services?
Or needs, yeah.
Sure. It's sang@myrarebird.com. That's my email. Just email me, ask any question. I would love to answer. I would love to help the young guy out for sure.
I don't think he knows his email address. Are you sure that's correct?
Go to Rarebird, myrarebird.com.
I think it's SVU, isn't it?
It's the same thing.
Is it the same?
Emails,
There's both.
Yeah.
Right.
Saying at myrarebird.
The one I email is SVU@rarebirdrealestate.com.
Oh, SVU at rarebirdrealestate.com.
Yeah.
All right. Saying thanks again for joining us. Guys, if you like this episode, please share it. Subscribe. I don't know all the things you're supposed to do with podcasts, but you guys probably do. We just
so old.
We just really love to sit in this room and talk to people about real estate. So we're recording it for your benefit. We hope you're enjoying it. Share us. We love you. We'll see you next time.